What does the top trends forecaster predict for 2016? Celente says, here's the cover of our trends journal, and it says the panic of 2016. It is underway. Gold is up over 20% since the beginning of the new year. Look at the banking stocks. They are down. Follow the money, that's the story. Follow the money, and look at the problems the banks are in. There is a commodity crisis going on. I am mentioning this because it all ties in together and going back to the banks. When they started the heroin and cocaine addiction, all that cheap money from heroin and cocaine addiction went into the emerging markets. Yet, all those resource-rich nations borrowing money for nothing, and the banks loaning them more. Now, these resource-rich nations around the world borrowed this money in dollars, and their currencies are way down. The banks loaned them the money, they have to pay it back now and they are not going to be able to pay back their debt. Follow the banks, and follow the money. Stock market crash of 2016, the countdown begins. It's time to start the countdown to the crash of 2016. No, this is not a prediction of a minor correction. Plan on a 50% crash. Most investors don't want to hear the countdown, will tune out. Basic psychology. They'll keep charging ahead with a bullish battle cry, about how the Nasdaq will keep climbing relentlessly to a new record above 5,048, smiling as they remember reading that a whopping 73 companies are now in the Wall Street Journal's billion. Hearts race even faster reading in Bloomberg Business Week that yes, technology IPOs are in the lead, and with all that good hear the warnings, countdown to the 2016 crash. The imminent fall of the West, IMF calling for immediate action before the global economy completely collapses. But the crash of 2016 really is coming. Of 2016. But a crash is a sure bet, it's guaranteed certain, complete with echoes of the 2008 crash, which impacted on the GOP election results, triggering a 10 trillion loss of market cap. Like the 1999 dot-com collapse, its post-millennium loss of $8 trillion market cap, plus a 30-month recession, moreover a lot like the 1929 crash and the long depression that followed. The rising US dollar is hurting the revenue and earnings of multinational companies. Until recently, multinational companies have enjoyed a slow and steadily declining dollar from its record highs. This decline boosted the translated earnings of multinational companies. As the dollar index breaks above 100, multinational companies, which are already struggling to make earnings from a slowing global economy, are going to have to grapple with the effects of an even more unfavorable currency translation. In the long term, a rising US dollar is great for America. However, in the short term it will not only negatively affect earnings, but also place extreme duress on the over $9 trillion worth of debt borrowed by non-financial companies outside of the United States. Iran sanctions to be lifted Saturday. Recent data confirms that the US is currently in a manufacturing marked the fifth straight month this index was in decline. For November, signaling contraction. Fractional increase from last month's 6, signaling a decline in activity and registering close to the lowest levels since 2009. Points to 3 from last month's. The Asian Infrastructure Investment Bank, the first multilateral financial institution launched by China, will open for business on AIIB. The new lending institution's inauguration ceremony will be held in Beijing. The bank was formally established at the end of 2015 with 57 countries agreeing to be members, 19 of which are Asian. The first batch of loans is expected to be approved by the middle of this year, reported People's Daily, the official newspaper of the AIIB's mandate will be to fund projects both inside and outside of Asian countries. Will billion to invest in infrastructure construction every year, according to data from the Asian Development Bank. However, current international financial institutions such as the World Bank and the ADB will have a hard time meeting the huge demand for infrastructure investment, said the paper. In an exclusive interview, Foundation said that Indonesia is in urgent need of a partner such as the AIIB. I predicted the panic of 2008, but I'm telling you now, Eric, that the global crash of 2016 is going to be twice as devastating as the one in 2008. The central bankers of the world have built up a massive debt bubble of over $225 trillion, and now the bubble has burst. The damage will not only rattle global markets, it's going to hit everyone. And the chaos is going to spread wide and far. People better prepare for this. They better learn how to survive and prevail. The panic of 2016? Gerald Celente correctly forecast the crash of 2008. Now he is saying that another crash is coming this year. First, a look back at the collapse in 2008. 2008, Economic 9/11. On January 3, 2008, Gerald Celente, publisher of the Trends Journal, business consultant and author, forecast an economic collapse within 2008. He said it would probably start when one of the big firms, or banks, crashed. Economic 9/11, we believe, is going to hit the United States in 2008. And just as the World Trade Centers toppled from the top down, we're going to see the crash happen from the top down as well. This talk about the subprime market. Yes, that's a problem, but nothing compared to when the big firms start failing, when banks go bust, brokerages go out of business. In 2008, we're going to see some major, giant firms fall and get hit by an economic 9/11. We don't know what the fuse will look like, but we know that the bomb is set already. He said to watch for big firms failing, when banks go bust, brokerages go out of business. See how it happened. September 13, 2007, news breaks that Northern Rock has sought emergency funding from the Bank of England in its capacity as lender of last resort. It prompts the first run on a bank for more than a century. February 17, 2008, the UK government announces that struggling Northern Rock is to be nationalised for a temporary period. March 16, 2008, Bear Stearns, the 85-year-old Wall Street firm known for its tough trading culture, was rescued from impending bankruptcy by a deal with JP Morgan Chase & Co. on March 16, 2008, making Bear the first major casualty of the financial crisis. The firm spiraled from being healthy to practically insolvent in about 72 hours. July 14, 2008, financial authorities step in to assist America's two largest lenders, Fannie Mae and Freddie Mac, owners or guarantors of $5 trillion worth of home loans. September 15, 2008, Wall Street bank Lehman Brothers files for Chapter 11 bankruptcy protection, and another U.S. bank, Merrill Lynch, is taken over by the Bank of America. October 8, 2008, the Bank of England cuts the interest rate by 0.5% to 4.5% in a surprise decision as part of a coordinated global attempt to ease the financial crisis. The UK government unveils an unprecedented £50 billion plan to part nationalise major UK banks and pump billions more into helping ailing money markets. On October 11, 2008, the head of the International Monetary Fund, IMF, warned that the world financial system was teetering on the brink of systemic meltdown. October 10, 2008, Britain was just 3 hours away from going bust last year after a secret run on the banks, one of Gordon Brown's ministers has revealed. City Minister Paul Miners disclosed that on Friday, October 10, the country was very close to a complete banking collapse after major depositors attempted to withdraw their money en masse. The Mail on Sunday has been told that the Treasury was preparing for the banks to shut their doors to all customers, terminate electronic transfers and even block hole-in-the-wall cash withdrawals. Only frantic behind-the-scenes efforts averted financial meltdown. Gerald Celente warns the global crash of 2016 will be twice as devastating as the 2008 collapse. In an interview with King World News, KWN, on February 11, 2016, he had this to say. According to the Bloomberg Commodity Index, commodities have now plunged to 1991 levels. This deflation is really a global depression. We are now looking at the panic of 2016 and the second round of what has been politely called the Great Recession. And for many countries it's going to be a full-blown depression. That's why prices are plunging across the globe, along with worldwide stock markets. As I have been saying on KWN for quite some time, when panic strikes, gold prices will spike. The kind of massive surge that we saw in the price of gold today, that's what you are going to see more and more of in the coming months. The bottom line is, despite occasional pullbacks, the trend for gold is higher as panic continues to sweep across the globe. The headline in today's Financial Times: Europe bank shares stage rebound. What rebound? Just look at what I said yesterday on King World News. Part of what I said was that this talk about a bank buyback is BS and gold prices were going to surge. The banks are in deep distress. The banks are exposed in all these areas that are collapsing. That is why this deflation is turning into a global depression. The global crash of 2016 will be devastating. I predicted the panic of 2008, but I'm telling you now that the global crash of 2016 is going to be twice as devastating as the one in 2008. The central bankers of the world have built up a massive debt bubble of over $225 trillion, and now the bubble has burst. The damage will not only rattle global markets, it's going to hit everyone. And the chaos is going to spread wide and far. People better prepare for this. They better learn how to survive and prevail. The world can't afford another financial crash. They bounce back after terrorist attacks, pick themselves up after earthquakes and cope with pandemics such as Zika. They can even handle years of economic uncertainty, stagnant wages, and sky-high unemployment. But no developed nation today could possibly tolerate another wholesale banking crisis and proper, blood and guts recession. We are too fragile, fiscally as well as psychologically. Our economies, cultures, and polities are still paying a heavy price for the Great Recession. Another collapse, especially were it to be accompanied by a fresh banking bailout by the taxpayer, would trigger a cataclysmic, uncontrollable backlash. The public, whose faith in elites and the private sector was rattled after 2007-09, would simply not wear it. Its anger would be so explosive, so all-encompassing that it would threaten the very survival of free trade, of globalization, and of the market-based economy. There would be calls for wage and price controls, punitive, ultra-progressive taxes, a war on the city and arbitrary jail sentences. Signs of the times. As we move deeper into the time of the end, we have been warned to watch events. Here is another example of events to watch in 2016. China in serious trouble. China may soon have a rust belt of its own. Chinese officials announced plans to lay off roughly 1.8 million workers in the coal and steel industries, as part of President Xi Jinping's politically difficult effort to restructure the world's second-largest economy. In recent decades, China built its economy on heavy state investment in export-oriented manufacturing industries. Those investments created large numbers of jobs for low-skilled people flooding China's fast-growing cities. But China seems to have overinvested, leaving a glut of capacity in the heavy industrial sector that has forced plants to cut prices deeply. The low prices mean those factories are effectively operating at a loss subsidized by the state. Countries as varied as Brazil and Australia are large suppliers of crucial raw materials, such iron ore and coal, for China's industrial sector. They've been faced with steep declines in the price of those commodities. Brazil's economy has sunk into a deep recession. I can see now the event that is going to trigger the formation of reunification in Europe, the resurrection of the medieval Holy Roman Empire that we've been looking forward to, that is prophesied to come. But I believe that some event is going to happen suddenly, just like out of a blue sky, that is going to shock the whole world and is going to cause the nations of Europe to realize they must unite. Well, now I think I can see what may be the very event that is going to trigger it, and that is the economic situation in the world. Now when the financial structure breaks down, all civilization is going to break down. I just wanted to say that much. Maybe you can begin to see how serious this thing can become. Heaven and earth shall pass away, but my words shall not pass away. A leading market specialist warns us of a devastating economic meltdown in 2016. In our latest interview of Michael Pinto about the state of the global economy, precious metals, and Plan B planning, Pinto does not hedge his predictions. The world and especially the United States is dead reckoning toward a devastating financial collapse that will make the Great Depression look tame. Pinto points out that the upcoming collapse will trigger big-time problems for anyone holding stocks and currencies not backed by REIF. You want to really dig in and understand why Michael Pinto is so convinced that the world's leading economies have painted themselves into a corner that is inescapable, and why he is so convinced that immediate action is needed, then pick up a copy of his book, The Coming Bond Market Collapse, from his website. I'll suggest the same thing to you that I have suggested to Michael. Take a few days off and get down here to the north coast of the Dominican Republic and check out whether this place fits in your own Plan B. We chose this place for many reasons, but some of the leading reasons include: friendly people who welcome expats, lower cost of living, sustainable agriculture, organic foods, and low cost, year-round tropical weather, affordable real estate, very low carrying cost on real estate, low stress lifestyle, easy, affordable path to citizenship and a second passport, and maybe most importantly, very little government intervention. No nanny state attitude here. Al assets. He predicts the great crash of 2016 to 2017. But Pinto also points out that this tragedy also offers opportunity. In our video interview, he outlines 3 important steps that all Americans, Europeans, and Canadians need to be taking right now to be on the right side of this mess. He offers advice that you will be very happy you heeded when you look back on this troublesome blip in the global economy. In this interview, Michael Pinto also discusses why it makes good sense to invest in some land to support a self-sustainable lifestyle, and why citizenship and a second passport are very valuable tools in your Plan B toolkit. He even gives us some hints on the best ways to hold precious metals for liquidity. Resource-rich nations borrowing money for nothing, and the banks loaning them more. Now, these resource-rich nations around the world borrowed this money in dollars, and their currencies are way down. The banks loaned them the money, they have to pay it back now, and they are not going to be able to pay back their debt. Follow the banks, and follow the money. Stock market crash of 2016, the countdown begins. It's time to start the countdown to the crash of 2016. What does the top trends forecaster predict for 2016? Celente says, here's the cover of our trends journal, and it says the panic of 2016. It is underway. Gold is up over 2016. No, this is not a prediction of a minor correction. Plan on a 50% crash. Most investors don't want to hear the countdown, will tune out. Basic psychology. They'll keep charging ahead with a bullish battle cry, about how the Nasdaq will keep climbing relentlessly to a new record above 5,048, smiling as they remember reading that a whopping 73 companies are now in the Wall Street Journal's billion. Hearts race even faster reading in Bloomberg Business Suite that yes, technology IPOs are in the lead, and with all that good, hear the warnings, countdown to the 2016 crash. The imminent fall of the West, IMF calling for immediate action before the global economy completely collapses. But the crash of 2016 really is coming. Of 2016. But a crash is a sure bet, it's guaranteed certain, complete with echoes of the 2008 crash, 20% since the beginning of the new year. Look at the banking stocks. They are down. Follow the money, that's the story. Follow the money, and look at the problems the banks are in. There is a commodity crisis going on. I am mentioning this because it all ties in together, and going back to the banks. When they started the heroin and cocaine addiction, all that cheap money from heroin and cocaine addiction went into the emerging markets. Yet, all those